All right, what does the real estate market look for in Q4 of 2022? What's up guys, Dan here, and right before we get into this video, a quick shout out to my partner on this video, Rent Redi rental management software, which is the software that I'm going to use to help weather the storm during Q4 of 2022. Go ahead and get 6 months for only $1. Use my link in the description below, Rent Redi rental management software. Let's go ahead and get right into the video. All right guys, what does the real estate market look like going into Q4 of 2022? As of recording this, it is October 9th of 2022, and we are going into the final months of 2022. If you haven't been living under a rock, as you can see outside, the market is rapidly shifting. The Fed just recently raised rates. Prime is at 6.25%, I believe. And right now, as of me quoting a bunch of local banks, the rates right now to get a loan for an investment property is about 6.75 to 7%. And what this is doing, guys, and this is from my own experience, this is not just fluffery. I'm in the trench every day. We have 2 properties on market right now, and we are trying to buy assets as well. We're looking at deals every single day, guys, and there is definitely a slowing going on from listening to other people in our industry, in our city. We're in Kansas City, Missouri, but I'm sure that it's happening all across the country because of the nationwide changes that are happening. So we've just recently been in an extremely hot seller's market where the environment was extremely favorable to the sellers. You could sell a property almost instantly, no matter what price it was. Somebody would buy it, hedge fund would buy it. You were getting under contract within days or a week of putting it on the market. That's changed. So, I think the last recorded average days on market as of a month ago was about 9 days. I would say, just guesstimating, that's probably doubled now. I would say it's probably about 20 days average on market, which is not, we think of like the last 2 years have been an absolute anomaly. Like, this is the only time I've ever been in real estate, but just looking at historical data, this is an absolute crazy anomaly that properties are selling this fast, and we've been in such a crazy seller's market for so long. And that's just due to a multitude of factors, mostly low interest rates, as well as very low housing supply overall, just due to lack of building over the past decade. But going into Q4, the Fed has done multiple rate hikes from basically 0 to now at 6.25% prime rate, and that has caused people's payments and the cost of real estate the cost of owning real estate in terms of payment perspective to rise dramatically, increasing by 50% or doubling in some cases. That's for residential, that's for commercial. Essentially every single aspect of real estate has the cost of money has increased, which as a byproduct lowers people's buying power and lowers the returns on an asset, and therefore lowers the prices of houses and inventory and commercial properties, right? So what do I think is going to happen going into Q4? Well, what is happening right now is that the market is correcting. It's probably still a seller's market statistically, but it is very quickly shifting into a buyer's market. And what that means is that there will be more properties on market than there are people to buy them. That's going to probably keep going until people decide and lower their prices, because what we're doing is a lot of these sellers are coming off an environment where and this is at all levels, even commercial people, even residential people that are selling their houses, to essentially anybody with real estate, is coming from just literally like a month or 2 ago where the value of something was this and it was selling almost immediately, to now they're trying to put that property up for based on comps and comparable data from just months ago, and stuff is not selling or not selling nearly as fast at those price points because the cost of money is so much higher to buy them. What that will do is, as long as sellers stay sky high on their prices, for lack of a better word, because they're not coming to the realization of what it actually is costing the buyers to buy these properties, then they will not sell, right, until they have to sell. So people that are holding that don't need to sell probably won't. They will probably hold on because the values are deflating just because people cannot afford them. And that's with residential property, also with commercial property, because properties that were if you don't know much about cap rates, all cap rate is essentially the return on your investment if you paid cash for the property with no debt. But most investors don't do that. They do not pay cash for a property. And even the ones that do, they're savvy enough to not buy properties with lower caps than they could afford with debt, right? They're not going to be dumb about it. So what's happening now is when debt was 3%, people could sell properties at 4 caps and 5 caps because people getting loans on those properties were positively leveraged, meaning the cap rate exceeded the interest rate, okay? But now people are trying to sell, apartments and things like that at like 4 caps and 5 caps, and the cost of money is 7%, right? 7% interest. So it just doesn't make sense. They're negatively leveraged. You're going to be making you're actually probably going to be losing money on the property unless you put a ton of money down, because interest rates are higher than what the owner wants to sell the property at. And all a cap rate means, so like say your property made 100 grand in net income, you divide it by a 5 cap, 5 or 0.05%, and that would give you a valuation of $20 million. So what happens when cap rates go up because interest rates go up? Like that property, you probably would have to pay at an 8 cap. So if you divide 100,000 by 0.08%, that property is only worth from 2 million down to 1.25 million. That's a massive drop. That's like a 37% price reduction from a valuation that this apartment owner could get months ago. And so if he doesn't have to sell the property, he's probably not gonna, because he's only getting about 2/3 of the money that he would have gotten when interest rates were a lot lower. And so what is happening is people are still trying to sell stuff for valuations that were good and correct about a few months ago, but now don't make any sense because the cost of money has gotten a lot higher. And so all that is to say that basically what is happening is we're experiencing a correction. Prices will drop because it's just the law, the financial laws in place, right? The people will not lose money. They will wait for better deals. I think that right now, there will be a deflation of prices. They will come down. Inventory will go up because there's still going to be people that think that their stuff is worth more than it is, as what most sellers do. And what this is, if you're trying to buy, which I am, do not let this scare you. Do not let any market scare you. You will come out on top if you just buy great deals, get good long-term debt, and operate your assets right. You will come out on top in any market. And this is going to be great for you because you're going to be able to buy up properties at a lot cheaper prices than you would have in the previous. Basically, the market we're experiencing, you're probably paying the toppest dollar that you will for a good long while, right? And that's fine, as long as the property cash flows and that you're making good returns on it, that's 100% okay. But what's happening is the value of properties is going to go down relative to their income, just because the debt is more expensive. And this is actually a good thing because it's going to give you a lot more time to be a lot choosier on your deals. You're going to be able to get a lot more offers accepted, like lowball offers and good offers. You're going to be getting a lot more better deals because there's going to be a lot more fear and hesitation with sellers, because there's going to be a lot more uncertainty because they don't know if they're going to be able to sell their property. And they don't know, where the values are at, because they might think that they're falling. There's a lot of fear right now, guys. Like even with investors, they think that, it's a falling knife. And I don't think that this is like a situation like say 2008 or something like that, where property values just absolutely plummeted. It was a much different time. There was way more inventory. The loans had very poor underwriting. There was a massive job loss. Like the economy really crashed. In this environment, there's a ton of equity. Everyone has, good loans. They're well underwritten. There's a scarcity of homes on the market. Homes are being underbuilt, and everyone's got jobs. Everyone is still hiring, right? All these businesses are still hiring. That may slow down, but I don't see it going away. I don't see the job shortage going away. So those things will keep a very stable, steady rental market. And this will actually push people to rent more and make rents stronger, because buying will become more unattainable for your everyday buyer. So that's my prediction, guys. I think the prices will go down, and that shouldn't affect any of your existing properties, because as long as they're cash flowing, as long as you're in a good position, don't even worry about it, because you're not looking to sell anyway. You just need to go out there. There's going to be a lot more good deals to be had. People are going to be a lot more receptive to your offers because they're probably not getting nearly as many as they've gotten. And when people start waiting around and they don't get offers on their properties, and they don't get a lot of action. They're a lot more receptive to anything you throw at them, right? So I think you're going to be able to get a lot better deals over the next Q4 and then beyond into the next year or so. All right, guys, if you like that, go ahead and hit the like button down below this video. Check out Rent Redi. Get 6 months for only $1 with my link in the description below. Subscribe to the channel. Check out another video. And this is Dan Cohan, and I'll see you in the next chapter.